108 points on the Nifty, and day's high basically is where we stand. Let's quickly look at what's happening with Reliance as well. RIL was a big reason why you got about additional 20-30 points in the Nifty. With RIL moving up, the Nifty also moved up along with it. 1127, it's holding almost at the day's high. The other one is Zee Entertainment, again a Nifty stock. It's done poorly over the last couple of sessions, but today it's up about 2.25% or so. Third quarter results later this afternoon. Mangalam is here to run us through what the expectations are. Mangalam.
Well, ahead of the results, the stock is buzzing, but through this quarter, the stock has corrected a bit, and there are a few reasons for that. And the first one is that there were a spate of brokerage downgrades coming in on Zee, and then we had the promoters' announcement that came in about their intention to sell about 50% of their stake or get in a global strategic partner. So those are a couple of important news flows that the people will be keeping their mind or their eye on for the results. In terms of the reported numbers, watch out for a 15% growth on the company's top line. EBITDA likely to grow higher by about 20%. We're expecting the margins to come in around 33.7, closer to the 34% mark. The margin expansion will be limited on account of investments in ZEE5. The net profit, now optically, it's a 36% growth on the bottom line, but absolute numbers, watch out for 440 to about 450 crores in terms of the bottom line that the company reports, and that's primarily on account of the base. There was a net loss of close to around 41-42 crores. So adjusted net profit likely to be higher by 21%. For Zee, it will be important to watch out for their ad revenue growth. The street is working with a range between 15 to 17% as far as their reported ad revenue is concerned. 16 to 18% growth on the company's subscription revenue growth is something that the street will be watching out for. Keep an eye out on how the viewership share has emerged, and most importantly, the management commentary on investments in ZEE5 and the impending promoter stake sale that is likely. Any update on that is something that the street will take heart from.
Yes, absolutely, Mangalam. Thanks very much for that. I think commentary would be extremely important for Zee Entertainment this quarter. Just look at the way that stock has fallen from levels of over 600 1 year ago to 460 at this point. But the other stock in focus is KPIT Technologies, which will be coming out with its numbers. Rima is here to tell us what we can expect from that stock. Rima.
In the mid-cap IT space, KPIT Technology will be the big one to track. Now, the stock has been an underperformer. It's rallied 2.5% in the last 1 year. From its 52-week high of more than 300 rupees, the stock has corrected close to about 35%. The momentum will be soft this quarter on account of seasonality as well as corporate action around the demerger. So we're working with a dollar revenue growth of 0.9% on a quarter-on-quarter basis. Constant currency growth should be about 1.5%. Margin expansion is likely to continue for the 6th straight quarter. So we're working with margins of 13.8%, aided by efficiencies as well as the INR depreciation. In fact, this margin improvement trend at KPIT Technology has been a heartening feature. From a low of 9.1% in Q1 of FY18, we've seen margins expand to over 13.5%. Profits, on the other hand, despite the margin expansion, will be under pressure on the back of higher tax rate and possible forex loss. The key to track will be their FY19 guidance. Now, currently, the company is guided for an 8 to 10% revenue growth. In the first half of the year, the company has reported a growth of 9.8%, but Q3 is typically softer, Q3 and Q4, so the company is likely to hold on to it. On the margin guidance, what the company told us last time is that they're likely to exceed their margin guidance of 11.5 to 12.5%. Considering the INR depreciation, etc. So what the new margin guidance will be something that the street will track, and an update on the Birlasoft transaction.
Okay, Rima, thank you very much. So Zee and KPIT, I mean, two numbers and previews. Keep an eye on those numbers as they trickle in. We'll put out more previews a little later. But it's time at 11:30 to go across to Ashwini to take stock of what to make of markets and what to do from here, really. 111 on the Nifty. Ashwini, thanks for joining in. Do you see sense in chasing this move higher?
See, there are some moves which are meant to be chased, and I think this is one of them, because your downside is hardly 100 points from here on the Nifty. On the Bank Nifty, maybe it is about 150 odd points, and upside, if we get enough global support, then you could easily get towards 11,000. The reason I'm saying that is that for the first time you have Reliance, HDFC Bank, Infosys, everything participating, and the kind of momentum that we've seen since morning is only showing that 10,900 is now a matter of formality, and another 50 points and you'll have a very large expansion on your hands. So I would think getting in now also gives you a fairly good risk reward.
Okay. What would your stocks be, Ashwini?
See, three stocks seem to be leading this move. So Reliance is a buy with a stop of 1100, target of 1145. HDFC Bank is a buy with a stop of 2100, target of 2165. And Infosys is a buy with a stop of 720, target of 745.
You've only chosen frontline stocks. Would you probably look at something like a Jet, which is seeing follow-on buying, or maybe an Avenue Supermarts, which is in the red for the second day running?
See, it's not very wise to pick up things where there is controversy or some derating that's happening. If you pick stocks near 200, just about coming in with results in a couple of days, those sort of companies do much better. Tomorrow, there's something adverse on Jet, goes down 10%. Money is not made by doing all these stocks which have great news flow.
Ashwini, just to come back to the broader index, you said, the stop is, the risk is 100, 150 points. I just want to understand what has changed in your mind, because, we are basically back at where we were in terms of Nifty levels 2 or 3 days back, right? At that point, you were saying that we are at the upper end of the range, and, the broad range will be this, it'll keep whipsawing. You get to the upper end and then the market breaks down. What has changed? Because, even in terms of drivers, there is an additional reliance today, but if you leave that aside, it's just still banks, which was the case a couple of days back as well.
See, IT index is up 360 points. So you have IT index higher, banks higher, plus Reliance higher. And the way these, big guns are moving, it's like 2-3% type moves. So if you had the odds of, breaking 10,900, they seem to be the best in this move, because even by afternoon, you could take that out. So if your range was 10,750 to about 10,900, you are going to cross it within a single day. So that just shows you the force, and obviously follow through is important, but this time it looks like the follow through could come in. The lower end has been tested. 50-day moving average, 20-day on all indices has been held. Globally, things are turning around. So that way, given the narrowness of our range, we are ready for some sort of expansion.
Okay, well, we have a couple of Twitter queries for you. Ashwini, Mahavir wants to know if Sun Pharma is a good buy at current price levels, or if there is a scope for correction.
See, Sun Pharma, you can't be sure whether the worst is over or something else will happen, etc. I think there are much better pharma stocks like Oro Pharma, Biocon, Divi's Lab. Always enter into things where there is a clear uptrend, where there is no resistance at higher levels. Sun Pharma, I think it's still debatable. We'll find out. But overall, there are other pharma stocks which are trading even at new highs. Those can be looked at.
Okay. All right, Ashwini, we'll let you go on that note. Thanks very much for joining in, and we will touch base with you in an hour again to get more details in terms of your technical